Geopolitical risks unlikely to derail Bitcoin as Analyst doubles down on October. Bitcoin, bull market, bull run. 10x research points to the narrative centered around concerns about the U.S. economy as a driving force in October. Last updated, October 7, 2024 at 20:50 GMT+3. Junior content creator, Harvey Hunter. Junior content creator, Harvey Hunter. About author. Harvey Hunter is a junior content creator at cryptonews.com. With a background in computer science, IT, and mathematics, he seamlessly transitioned from tech geek to crypto journalist. Author profile. Share. Copied. Last updated, October 7, 2024 at 20:50 GMT+3. Why trust Cryptonews? With over a decade of crypto coverage, Cryptonews delivers authoritative insights you can rely on. Our veteran team of journalists and analysts combines in-depth market knowledge with hands-on testing of blockchain technologies. We maintain strict editorial standards, ensuring factual accuracy and impartial reporting on both established cryptocurrencies and emerging projects. Our long-standing presence in the industry and commitment to quality journalism make Cryptonews a trusted source in the dynamic world of digital assets. Read more about Cryptonews. 10x Research CEO Marcus Thielen reinforced anticipations for an October on October 6, dismissing fears surrounding geopolitical tensions as unlikely to derail Bitcoin's recent momentum. In a 10x Research report, Thielen reaffirmed a positive outlook for Bitcoin's price action in October, citing recent geopolitical tensions as unlikely to disrupt this bullish trend. While the report acknowledged its potential to spur volatility, he framed it as an opportunity for traders looking to capitalize on the market's fluctuations rather than a major threat. Instead, Thielen pointed to concerns surrounding the U.S. economy as the primary narrative driving price action through October, particularly focusing on the employment sector. Stronger than expected U.S. jobs data eases recession fears. Fears that last month's dovish rate cut would be too little, too late in tackling a looming U.S. recession are dissipating as stronger than expected U.S. jobs data foster optimism. The U.S. economy added 254,000 jobs in September, substantially surpassing Wall Street's expectation of 147,000. The unemployment rate also dropped to 4.1%, while the annual pace of wage growth increased to 4% from 3.8% in August. The stronger-than-expected jobs report prompted macro traders to largely eliminate bets on another 50 BPS rate cut from the Federal Reserve in November. According to the CME Fed Watch tool, money markets are now pricing an 83.5% probability of a 25 BPS rate cut next month. This supports the narrative that a soft landing for the U.S. economy is still achievable. The Fed may successfully bring inflation under control without triggering a recession. This development could stop recession fears from overshadowing the bullish narrative of rate cuts from the Federal. Easing this fear, uncertainty, and doubt, FUD, paves the way for what is anticipated to be a bullish concluding quarter to the year. A rocky start for Bitcoin. October still in play. Although the first week of October failed to deliver on what was anticipated to be ground zero for the next leg of the bull market, Thielen noted this to be a typical pattern. While Bitcoin has historically shown weakness in the first week of the month, the remainder of October is filled with critical catalysts that could sustain the upward momentum, he said. As the market's reaction to September's jobs data pushes this month into the green, Thielen highlighted the historical positive returns for October, noting that 8 out of the last 10 Octobers have posted gains, averaging plus 20%. The next U.S. Consumer Price Index, CPI, release on October 10th is anticipated to bring the next installment in the narrative surrounding the U.S. economy. The CPI forecast of 2.3%, down from the previous 2.5%, suggests a modest slowdown in inflation. This is corroborated by the Personal Consumption Expenditures, PCE Index, another key inflation measure, which already fell to 2.2% last month, indicating a trend of decreasing inflation. Meanwhile, Thielen noted that, despite speculation surrounding when retail investors would re-enter the market, it seems more influenced by institutional flows. As spot Bitcoin and Ethereum exchange-traded funds, ETFs, begin to see positive inflows again, institutional investors signal renewed market optimism for the month ahead. Political developments have also significantly bolstered sentiment in the cryptocurrency market, with the upcoming U.S. election emerging as a major catalyst for Q4. Vice President Kamala Harris's first public endorsement of digital assets has heightened this bullish outlook. Her recent comments affirmed a commitment to supporting crypto and AI to foster innovation. The endorsement, along with Donald Trump's open support for cryptocurrency, highlights a growing bipartisan backing that is expected to drive new Bitcoin all-time highs as the push for regulatory clarity intensifies. Follow us on Google News.